So today I thought I'd do a video on Facebook, or Meta. I always still call Meta Facebook. It's just so natural after talking about it for quite a few years. But yeah, we're going to talk about Facebook today. And because the stock has rallied up so much, I actually myself wanted to do this research. And then I thought, you know what, I might as well share it with you guys. And personally for me, I thought, is it now time to take some profit on Facebook or Meta? Because the shares have gone up rapidly. So I thought I'd share my thought process and what my feelings are right now with you guys. And hopefully some of you guys that might be in the same position that took advantage of the dip in Facebook and Meta that it had only a year ago. Maybe you guys as well are up on that position. And let's just look at this situation now and see what we think anyway. So hope you enjoyed the video. Let's get started. And by the way, if you do want to get a free share, potentially worth up to £100, join Trading 2 and 2 with the link in the description. Someone did it just a few hours earlier, and I think they got around about a £60 share in Rolls-Royce, which isn't too bad for just signing up to Trading 2 and 2, which by the way, in my opinion, is the best broker in the UK and is currently the broker that I use as well. But let's get stuck onto Meta. So Meta, it's been on a big rally, as I'm sure some of you guys know. It's crazy to think that under a year ago, the stock was valued at around, well, the 52-week low of $88. And since that time frame, the stock is up nearly 200%. And anyone that has held Facebook or bought Facebook is sitting up on them positions. And for me personally, I've got one account with, I think the shares up 40 something percent, and the other account, the shares up 70% or around that. For me, a lot of those shares were actually bought in the likes of 2018. That's actually when I first started buying Meta. I've owned this stock for around about 5 years now. And, you know, for me, I had this stock in there. I couldn't believe that when it actually got to the point where I was down on the position of the shares that I bought in 2018, that was the reality of me, like going, I've held these shares for like 4 or 5 years and I'm down on this position. That's when I was starting to think this is actually painful how big this drop has kind of been on at the moment. So with that drop in Meta and now the recovery, is it time to sell? Because the stock is starting to get towards the all-time highs. You know, the all-time highs was around that 2021 time where we know stocks got to extended valuations. You know, can this stock realistically get back up to the high $300 range? And obviously right now it's trading at 34 times earnings. It's crazy to think, can we value the same company that was once valued at 12 times earnings now at 34 times earnings? Can we justify overnight that to go from a stock at a very low valuation to now a premium valuation? Has it deserved to have that? And that's what's really important to look at. Now, obviously, when we look at this time frame in 2021, why were the shares so high? Well, let's look at the past performance, for example. So if we do look at the past performance, I mean, look at that for a track history. You can see here the performance has been absolutely amazing, but the financials, as you can see, did really peak out in 2021. That's when they were hitting 117 billion in revenue and they were hitting 39 billion in profit. And as you can just see here right now, they are going to go through a dip from that revenue, which did cause, and a dip from profit, which did cause the drop in the stock. And that's clear when we look at 2021, for example, and we look at the revenue in that time frame, or this is actually 2020. If you look at the time frame, you know, the revenue was around 28 billion, and then you look at now and it's up to 32 billion. So there has been a slight increase in there. But the big thing is when you start looking at net income, and you can see here it went from around 10 billion down to 4 billion. That's a rapid drop, and you can see that really starting to play on the financials, as you can see here. And that was the cause of concern, because they were flat on the revenue and declining massively on the profitability. And that was, you know, a couple of reasons why. You can see here costs and expenses rose rapidly. You can see here operating margin declined rapidly. You can see here the tax rate as well increased a lot more than what it had been previously. There was a lot of combining factors, and as well as that, people were starting to say that Meta's a dead platform. There was the talk about TikTok and TikTok being a major competitor, and that's the cause as well why they're struggling, which isn't really. Meta has now adapted with Reels, and that's obviously being now pushed away, and maybe one of the reasons why it's going up. But the fear was a lot around the reality labs and the spending they were potentially using on the reality labs. And you can see here that reality labs is still really, from a year ago, is actually still making less money than what it did a year ago. You know, there's been no improvement, even though there's a lot of this money being put into this. This isn't what's growing, and that's the worry that people have, is that they've been putting a lot of this money into this side of the business and it's still not showing growth. Now the difference is that people realize that this year or last year the stock did have flat growth because of the marketing environment that we're in. You know, we entered a really tough environment in the economy, and that's why a lot of the revenue did decline, and people thought, oh, it's competition. It's not. It's because the environment that we're in were really poor. And now people have started to realize, oh, actually this year Meta or Facebook is going to go back to 7% growth in the next quarter, or the current year it's going to grow 8%, and the year after that it's actually going to go to 10% growth. So the growth is going to start coming back on the company, and obviously the big thing is now they've actually started cutting a lot of the costs and jobs, and this is actually going to start driving profitability back up. And this is potentially why it's been on such a good rally, is because people have gone, oh, actually it's not a struggling platform, it's not dying to TikTok, it was actually only struggling because of the environment that we're in, and also the crazy spending they were kind of doing on that Reality Labs. They are starting to wind it back in again, and they're going to start driving up profitability a lot more. And as Mark Zuckerberg says 1,000 times on the conference call, efficiencies, efficiencies, efficiencies. So people started to realize that this company is going to go back to growth, it is going to go back to profitability. But the big thing is, it's not going to go back to the times where we justify the stock being where it was at 2021, $372. It's not going to yet go back to that level of profitability. They are going to get back to that point in revenue, but profitability is not going to get to the levels of 2021. And now a stock like Meta isn't really, growth is important, good growth rates are important, but the big thing is profitability. It's a major company, a profitable company, a bit more of a value play. So we need to see profitability going up. Now, obviously, if you look here, the peak was around 40 billion. We're not going to see 40 billion this year. We're not going to see 40 billion in 2024, according to analysts. We're going to see 40 billion in profit in 2025. So to get back to 2021 levels, we're probably not going to see that for another 2 years yet. So that's obviously something to really factor in. And since 2021, something else that's really important to probably factor in is the balance sheet. They have started to take a bit of debt on the balance sheet, so there is 8% debt to equity at the moment. But the big thing is the cash. They were investing very heavy into the business, and you can see here they went from 64 billion in cash down to 37 billion in cash. So that's a rapid decrease. That's half your cash pile gone. So the balance sheet isn't as strong as what it used to be. Granted, most businesses would die for this balance sheet. It's still a very good balance sheet, but you've also got to factor in it's not as good as what it was, which is something to consider. But overall, you can see here the dip was massively overdone when you look at Meta. When you think that you're still going to be a platform here that's still going to put in 10% year-over-year growth, and they are going to go back to driving the profitability that we talked about earlier. This is still going to be a very good company in the next year if they can grow at these growth rates and drive up profitability. So we know the company just got totally misvalued, and now it's starting to get a bit more fairly valued. So the next thing is, it is a good company, so do we want to hold that company, or is it probably a company that we want to take some profit on the table? Because I personally look at Meta. I don't think Meta's a company you'd want to sell if you owned it, especially if you got these sort of averages. I don't think you'll see this average again. Now, granted, Meta is quite a volatile stock, as you can see. There can be dips in it, which is worth pointing out. But the fact that it went down to them sort of levels, I don't think we should see them sort of levels for a company that's growing like this. And I think when you talk about Meta, you talk about, you know, people talk about competition and competition coming into the space. Facebook's been around for 15, 20 years. And people talk about competition. In that time frame, people know how big social media is, and it's taken nearly 20 years for a competitor to be serious. You know, TikTok, that you actually go, that's actually a threat. All these other social medias have come along, and they've not really been to the scale of Meta, and it shows you that Meta does have a moat. It does take a moat to get to that social media platform, and realistically, are they going to go anywhere? Is Instagram going to go anywhere in the next 10, 15, 20 years? I don't think so. It's very hard for someone to come into this space and take Meta's crown. So I think Meta is a company you probably want to hold if you do own shares, because it should still grow profit and revenue. But ultimately, I look at this and go, I still want to hold it because it's going to be a mega stock still for many years, but has it kind of got to a richer valuation where it might be worth taking some profit off the table? Well, for that, let's look at the metrics. So if you have a look at the metrics right now, and this is on a forward basis, total enterprise value to revenue is a 5 compared to normally about a 7-ish. So that's about right, considering it is a forward metric. If you look at total enterprise value to EBITDA, it's around about a 10. Normally it is just above a 10. So that's, once again, it's a forward metric. I'd say that's about right. On a PE basis, it's 21. It's normally around the 20. It is normally valued a lot lower than a lot of the other tech stocks, just because it has that controversy around it. And if we go on trailing basis, which would probably be a bit better, same again, if you look at a P basis, it's a 33. Normally it has traded around this sort of range, which is around that 20 to times earnings. Apart from, as you can see here, that's how ridiculous it was, 11 times earnings. You can see that's why it stood out as a very ridiculous value, as you can see here. And if you look at free cash flow, it's around about the same as what it normally is as well. So we're looking at a lot of the metrics here, and we can see that when it did dip, it was very well below its historic metrics, which stands out as being cheap, but it is now back in its normal kind of range here. So Meta is currently definitely fair value, and I'd say fair value to probably overvalued. However, like I said, is it a stock you want to run from? Would you want to run from a stock if you have a great average and you're still going to have a company that's going to be driving up the revenue and profitability? For me, it's not a stock I would want to ever sell out, because I still think this company will grow for many years and is still a good company. However, is it time to go potentially, okay, we're a bit fair value, the growth or the share price return now might be a little bit limited, it is a little bit of a richer valuation, maybe it is time that I maybe take a little bit of profit off here, and that is what I'm currently considering. Like I said, I'm probably never going to sell Meta, but when I do look at the valuation and what it is right now, it is a point of view, do I just carry on holding it, or is it worth, okay, it is a little bit of an extended valuation at these sort of levels, it's still going to perform well because it's got the growth of revenue, it's got the growth of profitability, but it is a little bit of a richer valuation. So is there potentially 10%, 20% of that Meta position that I could potentially take off that table and use it in another stock? And also considering this is Meta and Facebook stock, and it is vulnerable to some dips quite often, that could also be something to consider. So when I look at the all-time highs of $378, it can get back to them sort of levels. The problem is, I don't personally think it'll get to them sort of levels soon, because it would have to trade at a rich valuation, which it could do, never rule it out. But I think realistically, when we look at what it normally trades at, we probably won't see it get to all-time highs on the share price really until the likes of maybe 2024, 2025. But saying that, that would still give you quite a good return. So for me at the moment, when I look at Meta, it's in a bit of an awkward place where it's kind of fair value, but it's kind of overvalued as well at the moment. So it's a really tricky one, and today I've not really got an answer to tell you what I'm actually doing. All I can tell you is it's not a stock that I want to completely sell out of, because I still think it should do very well going forward. The ultimate thing now is I've got to look at this and weigh it up with going, is it worth me holding on at this stock at this sort of valuation to see it go back to all-time highs, or can I identify another stock that probably will outperform Meta in this time frame? And that is a really tricky question when it comes to investing, and that's what I've got to have a bit of a think about. So really, after this whole video, I've not got an answer for you what I'm personally going to do. All I can tell you is that I'm not going to completely sell out of Meta. I'd be interested to see what you guys think in the comment section, and if you think Meta is currently a little bit overvalued and it's worth trimming out the position, or if you're holding forever. But personally for me, I'm a bit 50-50 at the moment, and I need a little bit longer to think about it. Anyway, hope you enjoyed the video. Catch you in a bit.